Hey, good evening, everybody. This is Ryan Owens with the RJF team at Keller Williams. Hope you all are having a good day so far. I wanted to spend the next couple minutes just kind of giving a quick update on what's going on in our economy and our markets, both on a national level and on a local level. I can tell you that we're in the midst of some crazy times, and these are things that our children's children will be learning about in history classes and economics classes. And just really quick, wanted to break down just a few of the things going on in our markets right now. I love this stuff. I could talk about it all night, but this is going to be just a really condensed version. If you have other questions, feel free to reach out after the video, and I'll gladly engage in more conversation. But wanted to start tonight by just kind of talking through the stimulus package that was passed this last week and the impact it has both on a national level and a local level. This bill provided funding for just a broad spectrum of companies and individuals, from the individual to small businesses to large corporations to auto to airline to healthcare to local governments. It's an all-inclusive bill, $2.5 trillion, and likely more before this is all done. But here's how it relates to us, and here's where we'll see the biggest impact on a local level is with the small business assistance through the SBA. And on the individual level, through the individual checks that are going to go, the $1,200 for individuals, $500 for children. And these are going to have a positive effect on the local economy once they're instituted and a part of, make their way into the system, I guess. And that'll be part of the challenge with so many requests to see how long that takes. But the fact is there is assistance, and the government has stepped up in a big way with this bill. And just to put it in perspective, when we went through the financial crisis in 2008, the stimulus that they put together there, what we called a bailout, was $800 billion for the banks and financial institutions. This is more than 3 times that size, just to give you some scale on the magnitude of what's going on within our economy. But the positive thing is that they've been able to act pretty quick, and they see the need. And so we'll see how this plays out over the next couple weeks. But as far as the stimulus goes, it is going to make an impact on a national and local level, and it's going to be good. But the truth is, the reason it's so necessary is because of what's going on with our unemployment right now on a national level, which we see trickle down into our local governments as well. If we went back 30 to 45 days, our unemployment on a national level was around 3.5%, which was a pretty historic low. And in 30 to 45 days, the jump that we've had in unemployment is hard to even fathom how quickly it's risen. I think there's estimates that we're going to see unemployment in the 12 to 15% on a national level. These numbers are massive. And you know, we all know somebody that's been affected by this statistic, and it's unfortunate. And I'm hopeful that on the other side of this, that the hiring is going to pick up, and that we're going to get through this pretty quick. But it is a big deal right now, and it's having an effect on real estate. It's having an effect on a lot of the economy. But the other thing that's at play at the same time as this global pandemic is what's going on in our oil markets, which is simultaneously a pretty big deal. And there's 2 aspects to what's going on in our oil markets. You might have noticed that the price of gas is dropping pretty dramatically, which is always nice. I think I filled up my truck for $29 today. I don't think that's ever happened before. So that's always good on a consumer side. But the other thing that we need to realize is that the reason prices are dropping so drastically is because of basic economics. We have a huge supply and demand problem in oil right now. We have a tremendous amount of oversupply that could create some pretty serious problems for larger companies, larger oil companies and refineries. Living here in Texas, we know how big of a part of our economy that is, and so it's good to keep an eye on what's going on there. We have the less demand because of the coronavirus and what's going on there, not just here in the U.S. but globally, has really driven down the demand. But also on the supply side, we've got Saudi Arabia and Russia having their own little war for market share. And at a time where we needed to cut supply, they doubled down and they increased their supply. Right now, we've got 10 to 25 million barrels of oil surplus on a daily basis, and we're running out of places to put it. this probably doesn't interest you as much as it does me, but it's something to keep an eye on because it does affect our local economy, more specifically here in Texas. So it is something to just keep an eye on. The other thing I want to talk about is real estate on a national level. And one thing to keep in mind as we talk through real estate is while there are similarities on what happens on a national level between here and Austin, there's also very many differences. And this has been the case for many years. Going back to the financial crisis, we saw a big difference in what happened locally versus nationally. And so just keep that in mind as we talk through kind of some of the stuff going on a national level. But there's three things that really influence real estate. And one of those is unemployment, which we already talked about is skyrocketing. And so it obviously has an effect on the national real estate markets. The other is interest rates, which are kind of going the other way. As the Federal Reserve cut rates down to between 0 and 0.25%, we're seeing interest rates on mortgage loans in the low 3s, 3.5. These are also historic lows, which is going to keep demand at least interested in real estate because of how cheap money is right now. And the last part of that factor is the inventory. And we'll go ahead and define inventory. Inventory is the amount of months that it would take to sell the current number of homes on the market with the current number of buyers we have in the market. So if we didn't add any new homes and we took the current demand, how long would it take for all the inventory to dry up? And on a national level, we're seeing that number around 5 to 6 months, which is what we would call a balanced market. We're not really in a seller's market, not really in a buyer's market when we're at 6 months of inventory. Kind of a balanced market. I expect to see that number tick up a little bit, but understand on a national level, we're seeing a little less surplus or a little less supply and a little less demand, and so those ratios kind of stay the same. So I imagine we'll see a huge impact in the inventory, but again, maybe it ticks up a little bit. So that's what's going on a national level. But if we break it down to what's happening here in the Austin markets or Williamson County more specifically, we'll kind of break it down from those same three factors: unemployment, interest rates, and inventory. And unemployment, the best numbers I can find are related to Texas and not so much Austin specific right now. But Texas, Texas is being hit just like every other state in our country. And specifically around the oil markets, we see Houston and West Texas being hit the hardest right now. The governor came out the other day and said he expects that we're going to see unemployment rates hit over 10% in the state of Texas. That's crazy, especially when you consider here in Austin, 35, 40 days ago, we were at 2.2% unemployment. That's considered overemployed. So just the massive shift that we've seen take place in the last month is pretty incredible. But I know I'm hopeful that on the other side of this, we can get back to business as normal, as usual, and we see that hiring kind of take off. I know that's what we're all counting on, what we're all hoping for. But has it affected real estate? Sure it has. When you have people losing jobs like that, it certainly has an effect. But again, we go back to the interest rates and what's happening locally. I think we could do an entire video just on interest rates and how it's impacted mortgage lending right now. But as rates have fallen, you've seen the amount of refinancing requests go through the roof. In fact, so much so that most lenders can't keep up with the demand. I think we heard a lender tell us the other day that the market's set up to accommodate about $3 trillion worth of refinances in a year, and they've had $10 trillion worth of requests. So the market is flooded right now, and what we're seeing on the refinance side is actually lenders increasing rates to curb the demand or increasing requirements in order to get refinanced in order to keep up with the demand that they have. This will settle down, and in the next couple months, there's still going to be plenty of opportunities to refinance. As rates kind of settle in, I think they're going to stay low for a while. But on the purchase side, this could be a great time especially if you compare it to last year when rates were low last year too, but they're lower now. In fact, if you were to buy the same house at the same price last year, your payment would probably be about 10% less than what it was the previous year. Or put another way, if you wanted to keep your payment the same as where it would have been last year, you can buy probably 10 to 15% more home right now, just with the way rates have dropped into the low 3s, the mid 3s. And so this is encouraging, and this is certainly keeping demand in our real estate markets. the last thing I want to talk through is inventory. And just as we talked about unemployment kind of hitting lows about a month ago, our inventory hit historical lows here in the Austin market in Williamson County as we went below 1.4 months of inventory in Williamson County. This is, I don't know that we've seen that number so low. I don't know when the last time would have been, but an incredibly low amount of inventory. And if you've been a buyer in the market and you've been looking for a little bit, you understand what this means. It's an incredibly competitive market. And when supply is so low and demand is so high, we've saw prices rising, we saw multiple offers. And has that slowed down? It has slowed down a little bit, for sure. But inventory still remains low. Again, I expect to see it tick up a little bit, but I can tell you that demand is still there. And so real quick, what I'll say to potential sellers, if you've been kind of watching everything that's happening and deciding if now is the best time to sell your house or if I should wait a couple months, here's a couple things to keep in mind. People are on their phones or on the internet. They're scouring photos of homes and other places more so than probably any other time. You've got a very captive audience if you were to put your home on the market right now. Something to keep in mind. We've also have the tools to be able to do virtual tours. We have the tools to be able to do virtual open houses, to be able to show buyers your home without them actually setting foot in it. And it could be a time when others are scared to put their homes on the market. This is your chance to get it in front of a very captive audience. To the buyers out there, if you've been on the market for a little bit and you know how competitive it's been and how frustrating it can be, this could be a great opportunity as demand has pulled back a little bit to go get that dream home that you've been eyeing for a couple months without battling 5-6 other people for the same home. I will tell you that homes are still moving. We're still seeing multiple offers. We're still seeing homes being sold in the coming soon phase. We're still seeing homes sold 2 days on the market. It's happened just this week. So the demand is still there, but it's not exactly like it was 30 days ago. So just to wrap up, I'll tell you that as we kind of break down what's going on a national level and a local level, just kind of taking it all in as this is all new to all of us, having to shelter in place and find new ways to do business. There's some very encouraging things that I'm seeing. I'm seeing communities rally around each other. I'm seeing people recognize needs and finding ways to meet those needs for their neighbors, for their family members, for their community in general. And this is encouraging. I see families spending more time together, see families working through budgets, figuring out how to have a healthy finances. I see businesses doing the same thing, really focusing on how to best meet their consumers' needs and how to shore up their balance sheets. And as we come on the other side of this, these are all things that are going to strengthen us as a community. And I can tell you that I'm excited for the opportunities that are outside on the other side of this. And I love where I live. I love where I work. I'm grateful to be a part of this community. I can tell you that the RJF team is open for business and we're ready to serve in the best way we can. So please reach out to us. We're doing our best to put out quality content and we'll continue to do so. Shameless plug real quick. I'll be doing a tax seminar this Thursday at 7. So if you have questions about how to appeal your property tax, and I can tell you if you've attended in the past, all new information. The coronavirus has created unique situations along with state bills that have been passed that kind of change the game when it comes to the tax appeal process. But guys, thank you for joining us this evening. I hope you have a wonderful night. We'll talk to you soon.